So, can we start now?
Yes, please, Shailesh. It's on time.
Yes, sir. Ladies and gentlemen, good day and welcome to Automotive Axles Limited 2Q FY24 post-result earnings call hosted by B&K Securities. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risk, uncertainties, and other factors. It must be viewed in conjunction with our business risk that could cause the future result, performance, or achievements to differ significantly from what it is expressed or implied by such forward-looking statements. For better voice clarity, we request all you to switch off the video while asking questions. To ask questions, please select the raise hand option. We'll call out your name and then you can tell your company name, and then request you to unmute yourself and ask the question. Please note that questions on the chat box will be monitored and it will be answered in the end. So to take us through the results and answer your questions today, we have top management of Cummins Meritor and Automotive Axles team represented by Mr. Muthukumar N, India leader Cummins Meritor, Mr. Nagaraja, President and whole-time Director Automotive Axles, Mr. Ranganathan, CFO Automotive Axles Limited. So we'll start the call with the presentation and it will be addressed by all the three members from the management team. Then we'll conduct a Q&A session. So with that said, I'll now hand over the call to Mr. Muthukumar. Over to you, sir.
Thank you, Shailesh. Happy morning, ladies and gentlemen. It's nice to be back with you for the investor call. And really appreciate for taking time to join with us during this call. Your support, the questions that you ask always makes us to perform better, and we strongly believe and we appreciate your support. With that, I have my colleague Nagaraj, who is President and whole-time Director of Automotive Axles. He'll be running through the company history, followed by Mr. Ranganathan on the company financial. Once again, over to Nagaraj.
Thank you, Muthu. Good morning, everyone. Just a brief introduction to Automotive Axles Limited. As you are all aware, Automotive Axles was established in 1981, and over the last 40 plus years, the company has grown to this level. And just to remind everyone that we have 4 manufacturing sites. Our mother plant is in Mysore, and then we have 2 satellite plants in Pantnagar and Jamshedpur, mainly catering to Ashok Leyland and Tata Motors, respectively. We have 2,600 plus employees. We are number 1 axles manufacturer in India when it comes to independent axle manufacturer, and number 2 when it comes to brakes. Our major customers are Ashok Leyland, Tata Motors, Mahindra, Bharat-Benz, we commercials. And our main products, as you mentioned, mainly axles, brakes, and also the axles for off-highway application. Next slide, please. As a part of a growth strategy, we continue to innovate and then develop products ahead of time. And last quarter, we did discuss about how it is helping us to achieve the growth strategies. So these are all the 5 new products. They are in pipeline at various stages, and many of them are with the design completed and under testing. We are introducing the largest tandem axle for application called MT160. This is again focusing mainly on 8x4 chippers and 10x4 tipper applications. We have a product for the backhoe loader. Again, this axle is under testing. We have a couple of new products. We will wheel and hub reduction axle along with the MT145. This is for the light and medium duty tipper application. We are also upgrading our current portfolio of products of RS120 and 145 to 12 and 49, keeping in mind regional specific application requirement, both OE customer and end customer requirements. This will be fuel efficient, lightweight, and having a higher durability life. Next slide, please. We continue to focus on Destination Zero. So as you can see on the right-hand top corner, 80% of our power consumption will be coming through renewable energy. And I'm very happy to share with you, as on date, we have already achieved 40% of our energy requirement is coming from renewable sources. It's not just about energy. We are looking at reducing the packaging. We have almost usage of wood has been reduced by more than 80%. We are focusing on water positive. In fact, Mysore plant is one of the few plants in Karnataka region which is having a water positive for the last several years. So we continue to focus on consumer preference and how the things are changing and how technology is going to help them help us in meeting their expectation. We continue to believe in diversified and inclusion initiatives. So there's a very big push from the management here to achieve this. And the employee safety, health, and fair treatment is always core to our business. These are the core values, and we continue to support and then make a significant progress in these areas. Thanks.
Thank you, Nagaraj. With that, I'll request Mr. Ranganathan, our CFO, talk about the financial highlights and how we have been performing year on year and quarter on quarter. Over to you, Ranga. Ranga?
Sorry, I got muted. Sorry about it. Thank you, Muthu. Thank you, Nagaraj. Just adding a few points to what Nagaraj just explained on ESG initiatives. IT initiatives in line with the Mission 25, we're also driving automation, all the processes, basically improving the productivity of the employees as well as the elimination of paper, or working towards a paperless office. And we have come across significant way. More than 30 to 40% of the papers have been eliminated. We are targeting next 2 to 3 years eliminate close to about 80% of the paper usage into all the key processes in the organization. With this closing remark on the ESG, I take you all through the financial performance. For the year, we have achieved a revenue of 588 crores. With the EBIT of close to 70 crores and PBIT around 60 crores. Come next slide. Just have a comparison of this quarter performance versus the last year. And compared to the last year, our revenue has grown by 24%. And our EBITDA has grown, absolute value grown by 35%. Last year, the same period, our EBITDA was 10.9, we are at 11.9 now. And PBIT at an increase by 49% with 40.5 last year crores last year versus 60.4 crores in the current year. Last year, for the quarter, the PBIT was 8.5, now is about 10.3. And as far as the YTD performance is concerned, really see for first 6 months, we have done about 1,122 crores as compared to 977 crores last year with a growth of 15%. And EBITDA is concerned, we have this quarter, this 6 months, with about 11.6% is a run rate versus 10.7 last year, the same 6 months. And PBIT is concerned, we have done about 35% growth with 821 million to that is 111.2 crores in the current quarter, current 6 months. So close to about 35% growth. but 8.4 last year for the first 6 months to 9.9, close to 10% for the first 6 months is our financial performance. So this is a broader highlights of the financial performance for the quarter and for the 6 months. Over to Madhu.
Thank you, Ranga. I see Mr. Pratik Kothari, you have raised his hand. We will complete the presentation and then we'll come to question and answer session. With that, team, I just want to give you how the market outlook is look like, what is happening in Indian economy. India continues to be very strong economy. The predictions from most of the financial institutions and the global index indicate that India will continue to grow same fashion and will be the fastest growing economy. You all know our ambitious target of becoming the third largest economy by 2030, which means we'll cross 5 trillion economy by the time. And if all these things need to happen, a lot of infrastructure push is happening. And you have seen that the push from infrastructure from the current government is going good. With that, I think we are seeing good amount of sales increases that is happening in the segment, specifically like tippers and haulage continues to grow. While this is happening, you have seen that the government is giving a lot of push on green passenger vehicle across most of the tier 1, tier 2 cities, and already a good amount of contract is being given to the various vehicle manufacturers. So with push from one side on tipper and another side on haulage and on the passenger vehicle, the commercial vehicle industry is set to grow. But not that easy with what is coming up in the political situation of going for election year for next year. And we are seeing that conserving cash from every fleet operator is going to be there. The other biggest advantage is a flat diesel price for the last 1 year. While there are not good amount of advantages for us to grow in this segment, you are seeing on that side the conservative customers, which make sure that our market is likely flat or single digit growth is what is happening in this. You all know that our largest customer is Ashok Leyland, who is gaining share, which is really good for us because that keeps us growing. There are few indicators globally, which is like our ocean freight has come to pre-COVID level, which is a good sign and again making India competitive in the global. Even though the vehicle scrappage policy has come as a voluntary, vehicle scrappage has started and it will definitely add a little momentum to the sale. These are the indicators which are positive. I think the commodity prices have softened, but it looks like the steel import from China has been controlled by the government. But at the same time, USA has agreed to reduce the metal import tariff, which means more steel will get exported from India, which may also have a concern on the increase in prices in the future. Commercial vehicle market, if you see, we are predicting about 3% growth over last year in between FY23-24. While the first half of the year has been reasonably good, we predict almost a flat in second half of the year in this year. But in reality, it may go from 3 to 10% depending on how the situation and is going to change in the next month. Your companies continue to work on the agility. The automotive axle team led by Nagaraj and Ranga, they continue to work on the agility to see that whatever the way the market goes up and down, the team will be agile to meet the customer demand, thereby capture the maximum market. If you see over a period of 2018 to 19, the commercial vehicle market has grown. It is actually degrown. We have made about 476,000 vehicles in 2018-19, whereas currently it is only 407. While the vehicle is less, I think we have already grown more than 4% CAGR growth in the market. Every year, we are doubling when compared to the market growth. And that is how we have moved it. And you can see your company's earnings per share is giving us a better return. And our focus on the growth strategy for the future, especially from every angle of export or penetrating into the market share or adding up the value additions in every product itself, is really helping us to improve our per acre realization. The company continues to focus on new product and modular design. Nagaraj has already presented to you. We are launching 3 or 4 products well ahead of market requirement, which will take care of the new generation requirement till 2030. Customer values and customer responsiveness is key in the organization, and your organization continue to get the support from all the OEMs being a customer responsive company. People are key for the organization. and operation excellence and employee recognition and employee engagement continues to be the focus for the organization to make sure that our organization is the best place to work. Couple of focus areas which I want to tell you is FY23-24, the market overall may be about 5 to 8% growth when compared to the previous financial year. The company continues to focus on Industry 4.0. Last time Nagaraj presented this, not this time, maybe he will give an update next time. And of course, other digitalization activities. The company is moving on to make 100% digitalization by the year 2028. As I said, commodity prices continue to soften, but however, our focus continues to be on the cost control. The focus on improving conversion and material cost performance always rewarding, and the company is trying to take the organization to the next level. People make the difference between us and our competition. So the employee engagement, the corporate social responsibility, the diversity, equity and inclusion, and sustainability, these are the 4 pillars on which we continue to work on people and the environment. We have started a program called Saukya for our employees to make sure that how good our people engagement and health continues to improve, particularly post-pandemic, which makes the organization more productive and the organization performs as a team. So the various activities that we have been doing in terms of the diversity, in terms of equity and inclusion, or in terms of making the employees always the best place to work, continues to work. The commitment to social responsibility in terms of setting up a skill development or in terms of health care and training more and more people employable continues to be worked on. The key actions in taking forward the employee well-being and making sure that your people feel that this is the best place to work continues to stay focused. Trying to utilize Atmanirbhar Bharat and thereby trying to expand exports under the new air vertical. Bringing in alternative technology, disruptive innovation, value engineering to see that your company is always competitive and we continue to gain our share, continue to expand in business. Compliance to regulations and ethical code of conduct are the key, and it is the focus area for the organization. Like Nagaraj said, moving towards destination zero by 2045, your company is working towards zero carbon emission. These are the key focus areas that we work with. Once again, thank you for your patient listening, and stop the presentation here and over to Sailesh back for the question. Thank you very much for your listening.
Yeah, thank you, sir. We'll now begin the Q&A session. So if you have any question to ask, please select the hand raise option. And while asking question, please unmute yourself. So the first question is from Pratik Kothari. He's from Unique PMS. Please unmute yourself and go ahead with your questions, Pratik.
Yeah, thank you. Hi, good morning, and thank you for the opportunity. So first of all, congratulations to the team. I think we have done much better than the industry. So one question, I mean, very broad, we do hear a lot about, I mean, in your comment, you did speak about the government's push on infra spend, the stable diesel prices. We also hear a lot about spend on mining, infrastructure, port development, etc. So if you can just highlight and I'm trying to correlate this to the MHCV numbers that we kind of predict for, say, this year, and which seems not much growth. So if you can just highlight what is happening, I mean, given the macro or top-down, what we read, how does it start reflecting in, say, the MHCV volume numbers?
We have just come out of the supplier conferences of all the major OEMs in India, be it Ashok Leyland, Tata Motors, Daimler, Volvo, Eicher, and all. All of them are upbeat about the numbers. I'm sure that, like us, you would have seen the number. During my presentation, I have shown the peak volumes in 2018 is around 465,000. When I talk about M&HCV, it's a place where we play 7.5 tons and above. Last year, the number was at 410,000, 407,000. The market is expected to be, the prediction today is by 2028 or 2030, the industry is set to get into 500,000 vehicles. Still 500,000 vehicles for India, for the population, is very, very less when compared to what we are using in other countries. But I just wanted to let you all know even though the number of vehicles is about 15% less, the tonnage-wise, we have already crossed the year 2008. That means India is manufacturing more and more bigger vehicles. That is why there is a demand for new product, which what Nagaraj explained about going in a bigger axle. So, and our per axle revenue is going up. So while the India market has not reached the same level of 2018 in terms of the numbers, last year we already crossed the tonnage in terms of 2018. Looking forward, if you want the M&HCV segment has to grow, GDP has to grow. Our M&HCV sales is always in relation to GDP. Of course, we have little concern on this year in terms of overall monsoon across India. The agricultural produce may come down, but generally it doesn't look like the second half of the monsoon period, it has picked up. So with a good agricultural harvest and a GDP growth of 7%, we believe that the M&HCV segment is set to grow. The other added advantage now is the mining that's going on, construction. So both surface tipper and deep mining tippers are growing. Haulage is growing. If you have seen that the indicators like diesel price is there, so the truck realization for per kilometer has gone up for most of the fleet operators. And a good government push in terms of buying the buses for the state transport organization and that to green. All these things makes us to believe that the market is set to grow, even though not it's going to be a very, very high growth. It's going to be a K-type growth is what we are saying. While these are the positive factors that I can say, we have conservative numbers. Yes, India is moving to an election year here. So a lot of conservative things will be there in terms of spending. So conserving cash will be one of the points which will be working everything. So India is in a mix, but the long-term forecast for India seems to be very, very optimistic. Hope I have answered your question. Thank you.
Oh, yes, you did. Sure. So second question on Cummins. It's been a while now that we have been together. So if you can just highlight how has our journey been all this while, any changes that has brought us in terms of customers, our operations, etc.
The Cummins integration is globally completed in full, and we are now part of Cummins. As I said earlier, I'm very, very optimistic about this change because it's going to bring a lot of new systems into our organization. Cummins, I think already we are working in various areas from operational transformation to going to the customer or cost reduction or consolidation. In every area we are working with them, and Nagaraj and team is working on how to improve the synergy in operation. The business teams are working together to see that how we can enhance the business. But however, not about areas working, but for all of your information, Automotive Axle in India is a joint venture between Cummins and Kalyani Group, and the independent company operates to the best of the, making sure that the best of both. What we got from Medicare, what we got from Cummins, what we have got from Kalyani, all utilized to make sure that this organization is turning into a world.
Great. Thank you and all the best.
Yeah, thanks, Prateek. So before taking next question, if you have any question to ask, please select hand raise option for asking questions. Next question is from Divyansh Gupta. Please go ahead. So give your company name and proceed with your questions.
Yeah. Hey, I'm Divyansh here from Latent Advisors. I have 4 questions. I'll take them one by one. What would be our capex guidance for the year and for the next year? Is there any roadmap that has been finalized by the company?
I leave it to Ranga to answer this question.
If you really look at it, the capex for this year, it is more in line with maintaining the sustenance. But definitely in the coming year, we are working on some automation and removing the bottlenecks. As and when we introduce new products, we also have some alignment and changes into the entire manufacturing processes. In that regard, definitely to improve the productivity, automation, and towards a new product, we will be spending more than the sustained capex Next year, this year, probably you may not see more than 10-20 crores. And next year, definitely it will be, we are looking at doubling that just to ensure that, the process automations and productivities and process improvements in the manufacturing. But, just if you are looking at something like, whether you're going to do it in substantial investment, like what we did in 2018, we are not going to scale up to that level at this point of time.
Understood.
And also need to
related to,
sorry, that's what Muthu was explaining. We don't hesitate to invest. It's not an issue. As you really see, our cash position is quite strong. But the point is that, we need to have a business case, and based on the business case, and if need additional investment, that we don't hesitate. But I'm sharing the input based on what information we have today.
Got it. Understood. Related to this quarter's performance, if I look at the overall P&L, there were a couple of things which were standing out. So one, if you could explain what drove the increase in the other income. It's higher than what happened the Q2 of last year. Almost doubling.
Yeah.
So
a couple of things. We are going through a TPM journey in the process. We are also going through every stream of our key processes, which is providing the support towards the top line growth or the cost or towards any other contribution to the EBITDA. So in that line, finance team brainstorming. One thing what we have done is about the management of the cash flow. We have gone through a complete brainstorming. We set aside the base. Basically, the reason would be like, we have brought in a very strong monitoring system in terms of the deposit and management system, where to invest and where to get the return on that. Broadly, their answer is about the interest income on the surplus cash is significantly contributing on the other income. Point number one. And we also started new initiatives in terms of weekend parkings in the mutual funds and XYZ to see the cash rotation and give the optimum results on that. That's a significant reason for it. Is basically bringing the efficiency in the surplus cash and the cash management process.
Understood. And the second question with respect to the P&L was that the depreciation amount has been reducing, right? So from about 10 crore, 103 last September 22, it has now become 89.
Yeah.
And it has been continuously reducing. So is it just we are not investing further new and therefore this depreciation is going down or something?
Yeah, that's a very sensible question. And thanks for asking that. See, we are debating internally. There are two things we are looking at, One thing is about the new product, we don't hesitate to invest. And point number two is about whatever the investment, what we are planning, between now and next year is about 60-70 crores. In that range, we are having in our mind in terms of doing that. We are figuring out the opportunities to do that and also our bandwidth to invest. Just because, depreciation is going up, we also need to have a demand in the market to invest. And second, that comes out with additional capacity, and definitely we are ready to invest. Point number one. And point number two, if we are going with any other new product lines or any new support to the growth initiatives, definitely we will be doing that. These are all in the pipelines, which the strategic team is working on it, but it takes time to finalize it. Point number one, at this moment of time, that's in the pipeline. Point number three, definitely, as we are going for Industry 4.0 and other automations and the new product as a part of the regular process, that investment definitely going to happen. Probably, yes, it is a 42-year-old organization, and and we are trying to automate in segment because there are two things. One is about our bandwidth to implement all the capex proposals is probably going to carefully design with the value proposition to the investment that we are working on it. Definitely, as I said, between this year to next year, we will be definitely doubling our investments, whatever the low, we are doubling it more towards automation and towards new product. But to be honest, to be between now and next year, whether the depreciation will continue to be this level, yeah, it will be continue to be level. There will be a slight improvement will be there in terms of the percentage. It might go up slightly, but it may not be substantially go up. By and large, it's a large industry, and along 42 years, most of the assets has already been depreciated. And wherever needed, we also gone with the automations. In 2018, we invested, and a lot of automation we brought in. New lines were introduced. So we're continuously working on it. We don't want to just jump into the investment just because depreciation is low. But definitely based on the new businesses, new products, and automations, we selectively doing it, which gives a maximum benefit to the overall to the business, and we are doing it. So that's the status.
Got it. And similarly for the other expenses, that has also seen about a 40 bips reduction. So was it freight related or something else which drove this?
We are actually, Muthu was saying that cost control is one of the major driver, and is largely towards your volume benefit, and we're keeping the base cost as same level with a minor variation. So that's basically right.
Got it. Understood. And just one last question. So while you had shown that graph of MHCV production, and whereas automotive has kept on growing, I understand also that some portion of our products actually ends up getting exported, right? So can you throw us some sense of light of how much of our product ends up going to the export market?
Dinesh, thank you. I think this is one of the questions that used to come in every investor call, and we have been saying that we will not be able to provide you segment-wise split up, but based on majority of your feedback that you have given to me, while I will not be able to provide you the absolute value of exports or absolute percentage, I can give a reference from you. Between 2018 to 19, our CAGR growth in exports is 20%. Okay? We have doubled the exports between what we have done in 2018-19 to now. So that's an indication that you'll be able to, I'm sure that you as analysts will be able to deep dive and get what you want. And we will continue to grow with Cummins taking over and with lots of focus. See, our focus is predominantly on the domestic customers, and we have to meet their requirements. But at the same time, we want to do more of export. Doing exports is going to phenomenally improve the systems and processes in the company and also quality in this company. So we'll continue to focus on expanding exports and see how we can do. At this point of time, most of our exports are going to our different factories that come in America globally, and then it goes to the customer because we have plants across every region.
Understood. The reason I was asking was that
yeah, go ahead.
Is looking at the domestic MHCV market and comparing it against automotive performance, is it a fair metric or not? Because it might, as you have mentioned itself, right, that exports have grown significantly.
Yeah.
Whereas the industry of Indian MHCV hasn't grown. So that's why I was trying to get a sense for that thing.
Thank you for finding this out. But I just want to tell you, in the last 10 years, if you see, or in the last 5 years, if you see, we have doubled the market growth. If you clearly take only from the segment, even on the commercial vehicle market, if you see, the market is only about 20% less than the previous, but we have grown 20% more. Dinesh, to other point, I think Ranga explained to you very well on the capex. Again, just wanted to give comfort to every one of you. Our objective is not to reduce the depreciation or this. In the 2018-19, we made significant investment to increase the capacity, and today the team has come back to a good level of capacity utilization. So we will be definitely working on the years to come about. We are looking at how the Indian M&HCV market is going to go, our overseas opportunities, our off-highway commitment. We are also going to get electrification into there. So we are little very, very careful on where to do the investment, because electrification is set to come in. What type of newer technologies or newer capex that we need to do. Nagaraj and team are working extensively to see that what new technologies is going to come in electrical, can we do those investments in those things? So they are working with the global team. So that is what is going to happen now. And any more investment that we do will be futuristic. We are already spending money on digitalization, but any capacity expansion that we do will be futuristic, which will take care of the new generation axles that is going to come.
Got it. Understood. And so just one, because you touched on the electrification. There is also a trend, or lot of media articles are pointing that EV might not be the correct, let's say, mode of power for CVs, whereas hydrogen might be a good alternative. Are we working anything on those lines? Or exploring
at this point
anything
in time, okay, I think it's more coming from OE, or I think Cummins India leadership team will be the right person to tell. Cummins is already working on hydrogen fuel cells or something. But if I restrict my questions only to the axles and brakes manufacturing, we are making axles which can meet any of the fuel that's going to come, whether it's a battery operated electric vehicle or hydrogen fuel cell or hydrogen or LPG, LNG. That's why if you see, there are more than about 15 to 16 players who are aspiring to get into the M&HCV segment in India today. A new player, your management or your team is working with every customer to see that when the axle is fitted, it's our Cummins Meritor axle.
Got it. Thank you and all the best.
Yeah, thanks, Divyansh. Before taking next question, just an announcement. If you have any questions to ask, please select hand raise option for asking questions. Next question is from Mr. Dhaval Shah. Dhaval, please give your company name and proceed with your questions.
Yeah. Hello, Muthu sir. Hello, team.
Good morning.
Am I audible?
Yes, we can hear you very well, Dhaval.
Yes, sir. Great set of numbers. This is Dhaval Shah from Girik Capital. So my question is with regard to the mining point which you were mentioning in the call. So if you could help us to understand what sort of so how many trucks sold in India would be going towards pure mining application? And given, the comments from various mining companies, including the largest Coal India, the kind of output they want to increase over the next, say, 3 to 5 year period, it is a large opportunity for MHCV industry. So, any number, like how many trucks are sold for the mining application? And any other big emerging opportunity do you see which will support the growth of the MHCV industry, which we have not seen in the past?
There are two things on this. The M&HCV is one, and off-highway vehicles is one. For example, if you're talking for Coal India, they are talking about making 60-ton vehicle, 100-ton vehicle for the mine. Okay, so I will not touch on that. If you look at commercial vehicle alone, media M&HCV, about 30% of the overall truck that is produced is in the tipper segment. And on that, about 45 to 50% goes to, or 55 to 60% goes to surface mining activities, road construction activities. The rest goes for the mining. The deep mining will be only hardly 10 to 20% in India. So OEM would be the right people to give this number or how it is going to go. But I wanted to tell you one thing. During presentation of Nagaraj, I will request him again to come and talk about India. We are making the largest tandem axle which can take care of this mining application.
Yes.
Cummins Meritor has a design for both surface mining with a higher tonnage and also going for deep mining because we make our protection axle. Enough amount of development is done. Testings have been completed with various OEM, and we are ready to launch the product whichever the market goes, whether it is going for a deep mining or taking a higher load. And that is why I think Nagaraj during his presentation said we are ahead of market and we are launching this product. It's almost 5 years, more than 10 years we launched our production axle. It is picking up now. We have launched about this tandem 160, which is the bigger size, about 2 years before, and we are now getting customers to fill it up. So Nagaraj, you want to add anything on that, Nagaraj? How we are getting ourselves ready for that?
Yeah, nothing much. As Muthu mentioned, we have all the required products, locally developed and available right now. And apart from that, there are additional products are also available in our global, regions or portfolio, so that it takes a very short period of time for us to localize it, test it, and then applicate it for the a specific requirement.
Okay.
And then, we did talk about last time. One is developing the product. Second thing is also validating it. Cummins Meritor has invested heavily into the testing facility here in Mysore. So nearly 80% of the products, we should be able to, do the validation locally and then, launch it in the market much faster than our competitors.
Correct, sir. And sir, also if you can touch upon the off-highway. So JCB has also given a very strong guidance for its India market, and also right now they are exporting, I think, roughly 40% of what they make in India. So how can we capitalize on JCB's growth in India?
While it may not be good for us, I think JCB makes their own axles in-house. But with the comments coming in, we are working with them. We are working with various OEMs in the off-highway segment. Nagaraj touched upon one of the points called TLB, which is more India specific and is being used majority by 50% of our manufacturing, or 60%, right, Nagaraj? Is the TLB axle in India. So we have developed the product which is very, very competitive and technically superior. We are working with the customer to go. We will have our challenges. While the opportunity is huge, challenges also continue to be good because we are going to fight against the internal capabilities of them. But we are very, very upbeat about, yes, we will be able to value sell the product and go to the customer. We continue to work with all the off-highway segments.
Okay, so this product we'll be selling it to non-JCB customers, right?
Why not? Even for JCB also, we have gone and offered our product saying that yes, this is a superior product. We are not choosing with the customer. We work with everybody to see that we will work with them.
Interesting. Okay, and last question. Since in the past we discussed about expanding our margins over a longer term. So by when can we see that thing, and any comments on the margin expansion front?
You have seen our conversion efficiency at any point of time is double of what market growth in top line.
Yes.
And for every growth that we are going in this, your EBITDA or PBT is growing almost again double of that. While like I think Shailesh spoke in the first, we are not giving a forward looking statement on where we are going to end up with. I can continue with the team led by Nagaraj and Ranga, continue to work on improving our efficiency, internal capabilities to see that we outgrow the market. I think that's the statement I can give. Ranga, if you want to add specifically, you can tell Ranga anything you want to add.
So, I know as a right question, the point is that always all of you have a dil mange more, how much we do. That's always be a point which is the expectation that pushes and sometimes sleepless nights, but nevertheless we are working towards it. As Muthu was saying, we have a strategic viewpoint looking at the market where we have every opportunity, we are looking at in terms of improving the bottom line, and where opportunities are that Muthu and team are working about how to get best realization of the axles from the customers. And as I mentioned, one other gentleman asked the question about even in the cash cycle, we are trying to improve the product. So we are looking at every opportunity. Though, as I'm constrained not to share a number that what we are looking at it, but if the volume is to our favor, we definitely see much improvement in terms of the margins Automotive Axles standalone. And also in future, if there's more opportunities coming in terms of the export or all other markets with new products and everything, definitely, we also seek an opportunity to improve our margin in those areas too. So, as you rightly said, the volume grows, you'll definitely see the growth. And even the volumes are stable condition during the COVID and other times, you see that our margin, we have put our best effort to protect the margins.
Yes.
So that's the reason we are conscious and about our fixed cost spending and keep our fixed cost and control. And also the conversion efficiency. And earlier Nagaraj also mentioned that our power, our solar power to overall power consumption is 40% now. We are working at taking it to 80% and keeping the fixed cost control. Definitely, these are all the precautionary measures looking at the MHCV cycle as our organization has learned over 40 years. So, in terms of managing the upside and downside, we are very careful about it. And when you go down, we'll also be ensure that we don't go down to that level of general market. And also when we go up, we try to maximize the profit. So definitely we are forward looking. The market grows, we are there to improve the margins.
Okay. So the raw material basket is softened. So while around 2 years back, even it was high, but our gross profit has remained consistent. So what is the reason for that? Like we're not in this quarter, we're not seeing an increase in the GP, or nor we saw a sharp drop in the GP.
No, compared to last year, definitely there's an improvement in GP, no?
Compared to the September
Surely
quarter, I think we are just almost
0.5%. If you really see the GP, we are seeing middle cost level, definitely there's an improvement of 0.5% compared to last year.
okay.
But also, Ranga, to this question, sir, we just want to let you know, when the commodity went up, we have a very good system of a back-to-back with customers. And so when the commodity goes up or comes down, our organization is not very greatly impacted except for the timing. I think we explained this in one of the presentations earlier.
Yes.
And whether the market goes up or softens, we will go back to OEMs and, the Indian automotive practices. We'll go back and make sure that the correction is done. So except for the base impact, rest of the things is not. Ranga, you want to add anything? Maybe look from that angle.
No, you're absolutely right. So the commodity does not add any margins at the bottom line. It only, the cost to cost, either the reinvestment happens, whether reduction or increase. So we don't tend to gain anything on that. Only it probably either it impact your bottom the percentage in terms of percentage. There's more a base impact. Other than that, I don't think there's not any.
Okay. Thank you, team. Thank you very much.
Yeah, thanks, Dhaval. If anybody has any question to ask, please select hand raise option for asking questions. Next question is from Mr. Sunil Kothari. Sir, please give your company name and ask your questions.
Hi, thanks for opportunity. I'm Sunil Kothari from Unique Asset Management. We are running a PMS. Sir, just little bit more clarity on the relationship with our this parent JV, Meritor and Kalyani. So how we transfer? What is the transfer procedure? Because what I understand from previous speaker also, commodity raw material prices has fallen, but we are not that benefited. We are doing innovation, we are doing automation, we are improving productivity, reducing costs, creating new products, but that reflection is not here. So how it works? I mean, we transfer all the products, we manufacture everything and we transfer to that JV and they sell to customer. So how the pricing works?
Ranga?
No, Mr. Sunil Kothari, as far as the pricing between both the companies, we have established transfer pricing mechanism, and basically the transfer pricing mechanism is set, and we have been following it quite some time. And this has also been validated by PwC as a matter of governance to see how are we doing it, and is it arm's length or not. And this certification is also placed before the board for approval. So as far as the pricing mechanism is concerned, we have very stable and established pricing mechanism. Definitely, that is no concern from an investor standpoint that I can give you. Point number 2 is about you're looking at so many initiatives and what we are doing and all. So if you really look at that, though we are putting the fixed costs and other variable costs in control, there are also cost increases naturally happening around us. If we don't, bring the initiatives, every initiative, if you're looking at that, and we need to bring up the bottom line improvement, is a quite natural expectation. There's no doubt about that. But it's also inflationary impact is there in every cost element year on year. Today's scenario in every element of whether transportation costs, whether it is, all our suppliers' conversion cost, and also the power cost and so many things. So we are bringing up so many initiatives to mitigate it and also try to bring over and above this inflation impact. What is the best we can do it in the bottom line? As far as the new products are concerned, definitely, there are 2 things we need to worry. You can't expect the new product developments, initiatives to show the profitability overnight. it has to go through a cycle before it comes into, required volumes to start contributing to the bottom line. So these are all futuristic, one by one definitely will show up. And the point I'm trying to bring a perspective is about, definitely our desire is, to do better, material performances and bring, mitigate the inflationary issues through the internal initiatives and all the stuff. So definitely the great efforts have gone in terms of mitigating this cost inflation and also showing a better profitability in the bottom line. So it's very difficult outside when you're looking at you guys are talking so much, great, but where is the bottom line? If you really look at the bits and pieces into the picture, there's so much of cost escalation is also naturally coming into the system that also we have to do over and above that. What is it we can do? So it's a very quite challenging environment. Some issues will happen next quarter on quarter. You can see it. Some issues it makes 6 months to 1 year to show the performances. But really see the real parameters. I suggest you, sir, if you really look at it in terms of the EPS, at the end of the day, the earnings per share is one of the highest we have shown in the last March 2023. Our desire is always to protect the shareholders' interest and ensure that we'll give the best value, not only in terms of profitability, but also in terms of the governance. We work very independently in terms of ensuring the governance and give the maximum confidence to the shareholders. That's basically our prime objective and prime value system in this organization.
Right. Sir, if Mr. Nagaraj or Mr. Muthu can explain a little bit on what that JV do the value addition. We transfer them the product, are doing everything. What value addition they are doing, so that will be helpful.
Nagaraj, you want to add?
Would you like to cover this for me?
Yeah.
More close to
you know much how you are working with them and such. You want me to answer, Nagaraj? Go ahead.
Yeah,
okay.
I'll just touch upon a couple of things. I did mention
you can touch upon the engineering.
Yeah. So a couple of things I did mention during the presentation. We've been kind of repeating it. So the biggest value what our partners bringing in or MHVSL is bringing in is bringing in the product and technology well ahead of time, and then having the necessary infrastructure to validate them. So once upon a time, our time to market for a new application or a new product used to be anywhere between 2 to 3 years. And then in the last 3 to 4 years, it has been dropped down to less than a year. In many a times, it is less than 6 months. I think that is the biggest, I would say, value add that is coming, which is really helping us to be very, very competitive in this market. We have been able to keep that, number one position when it comes to independent axle manufacturer. Just because of that. And if you go back to the history in the last 10 years, we are the Automotive Axles is the first company to introduce any of the products, whether it's a hub reduction, whether it is a axle with a diff lock, or the tandem axles. We are the first, company to introduce into the market. So this is going to be a big challenge without the support of, Cummins Meritor.
Okay. So these are all the things are done by this JV. Product validation, new product launch, new product technology. That is, you mean to say, sir?
Yeah, business development.
Okay.
And all this activities is being done by this, the entire testing, validation, investing on that testing is being done by them.
Great. So just to draw your attention, why we as a investor or shareholders being minority ask this question is just for you have the data, but just I'm for the sake of other listener would like to convey the profitability of that JV has tremendously gone up during last 2-3 years. Profit before exceptional item was 61 crore in 20, it was 51 crore in 21, and now 106 crore. So my point is, the efforts which you people are taking, are we able to gain or keep the share of whatever you are doing, or it's just because it's a 50-50, and we being minority always will think that way. And frankly, I raised this question 2-3 years also back. Yet I'm not able to satisfy myself. Just trying to draw your attention. That's all. I'm not seeking for any answer, but this is not comforting for minority. That I would like to definitely convey.
Sunil ji, I think thanks for your frank and question that you asked. We really appreciate it. If you see the profitability or the effort, who is putting the effort, it's all being worked at the one company and then done and then taken done. Your questions, I think, as you said, you have put up this question. I would request you to please visit to Mysore. I think that's what one of the requests that we have been giving. Maybe next AGM we can have it. Please understand for yourself the amount of investment that is going on in product, the investment that is being done on testing. Like what Nagaraj said, as an independent axle manufacturer, please understand 75% of the axles are manufactured by the OEMs in India. With the current 72%, I would say precisely. The companies which are making vehicles, they are making axle with them. In spite of that, for the critical application, important application, they come to us because we are competitive even with that is only because of the technology that is brought in. But thanks for bringing these questions and giving us the honest feedback. We will certainly work on giving the comfort to, it's not a minority shareholder. You are our shareholder, and we continue to work with you to gain the confidence and make this organization. Thank you.
The point was just to make you feel that what minority investors are feeling, because that profitability from 21 to 20 to also double profit from 51 crore to 100 plus crore. So it gives little discomfort to minority. That is my viewpoint. I don't know whether you will be able to satisfy me or other investors, but this JV is not giving comfort. I mean, you have to. I understand this is a quarterly Concall. I can't say any more on this, but the parents supposed to think about consolidating these things at some time. That is my suggestion and request. Thanks a lot for your explanation, sir.
Thank you, sir. Thank you very much for giving honest feedback.
Yeah, thanks, Sunilji. Next question is from Mr. Sagar Parekh. Please give your company name and ask your questions.
Yeah, hi, sir. Am I audible?
Yes, Sagar, we can hear you.
Yeah, hi. Thank you for my question and congratulations on excellent set of numbers. So first question would be on the capacity utilization currently. What would be the capacity utilization for brakes and axles, if you can give us separately?
Ranga?
No, brakes will be around, at this moment of time, close to about 70%, 70 to 72%, Nagaraj. And axles, we are more or less the same level. So, yeah, around 70 to 75% is what the utilization.
Okay, so basically at 600 crore quarterly run rate, you are at 70% kind of run rate. So you can still improve about.
See, one point I just want to draw, I think Nagaraj can add value there. See, as a new product introduced, the capacity, what we talk is about overall, full-fledged axles. But the various combination is always a 10-15% variation will be there when the new products introduced, new ratios introduced, because each comes with their own gear set, their own other assembly processes and XYZ. So what I'm trying to say is 70 to 75, it could be even 78 or 80 also. So, but depends on the ratios, depends on type of axles we manufacture based on the order board of the customer. Roughly, you can take 75 to 78% level kind of things at which utilization is there to make. Nagaraj, you want to add something?
Yeah, no, I think you're right. I think, Mr. Parekh, our capacity is kind of based on the product mix, like what Ranga just now mentioned. It depends on how many axles we make for, let's say, a tipper application versus regular line haul application. versus hub reduction. So it's a kind of, because we have put up a manufacturing line so lean and so modular, so that, our capacity kind of vary on the product mix. I agree with Ranga. It ranges anywhere between, 70 to 80% depending upon that particular month product mix. And just to bring everybody's attention to that, the demand or expectation from the customer has gone significantly upwards. And then I remember Muthu talking about this last quarter. The warranty expectation from the customer has gone almost doubled, and they want to, take it all the way up to 500 to 600,000 kilometers, 5,000 hours for tipper application. So this is requires different kind of manufacturing process, and that will have some kind of say on our capacity. And similarly for a bus application, noise NVH requirement has gone up significantly. So that's where Ranga was mentioning next 1 to 2 years time we are looking at making significant improvements to enhance the current capacity to accommodate all these different product mix, so that our capacity will be it will be good to especially meet those peak demands like this current quarter and next quarter.
Understood. Thanks for the elaborate answer. So basically, if next year, if we grow by about 10-15% in top line, then you probably be at about 90% kind of utilization. So next year, we would have to take some kind of decision in terms of capacity addition, or you think it's still some time away because debottlenecking and all those things can also improve the capacity?
No, sir. Parallelly, we'll be doing it. Like what Nagaraj said is while Ranga and Nagaraj give the overall utilization, like there are station-wise capacity utilization, and the team is working on the capex. For example, that's what Ranga was telling. Next year, we have planned to debottleneck some areas for the new technology, new products that is coming in, and we will continue to invest. And never in our system, we will wait for the market to invest. Even in 2018-19, what we invested is really helping us today. So we will continue to be ahead of market because by knowing the market systems, and we will continue to invest on. As I said, whatever the investment we want to do, we will be doing it for the next technology, so that we, even when the market goes whether to battery operated or fuel cell or new generation, our capacities or our equipment is capable of delivering those precision and accurate products.
Understood. Secondly, on this MHCV expectation for Q3 and Q4 that you have given in the slide, thanks for that. Just wanted to check this on Q4. Our MHCV volume expectation would be lower on a YOY basis versus Q4 last year, 126.
That is the current indication from the OEMs at this point of time.
Correct.
You've seen that actually registration is slowly started coming down this quarter. Okay, so we have just gone ahead with what is the indication that is coming from the market.
So that indication will be driven due to largely because of election-driven slowdown, or is there anything?
That is what is people want to conserve the cash. Then, like a normal investment that has happened in the last quarter, people are saying that, hey, people wanted to wait and watch. Maybe after December, depending on this mid-election result, maybe it's all sentiment will change and we may be ready. That's why, as I said, the company is prepared. I think Nagaraj and team, they are prepared to deliver even if the market is going to up north, so that we'll be agile and try to ensure that every opportunity is converted.
Understood. And last question on the defense side. So, would you like to throw any color on how the defense business is shaping up? So, in H1, for example, our sales have grown by 15%. Any kind of contribution mix or anything that you can give us quantitatively or even on a qualitative basis, if you can share some details on how the defense business is shaping up, that would be really helpful. That's my last.
We have 5 products that have been approved, and maybe if you look at the CAGR there, I think while the overall defense sales from our customers has come down, I think we have grown by about 3 to 4% from the base year, like what I have indicated earlier. but defense is a long term. But we are working every effort to make sure that 100% of our strategic partners of OEM, we are present there. That's what I would be able to tell at this point.
So you're saying that we have grown by 5% from?
Yeah, in exports we are growing, continue to grow.
On exports or I was talking about defense.
Sorry, defense. You're right.
So defense you have grown by 4-5% CAGR over last 2 years.
3%. If you take as a base of 2019 or 2020, yes, we have grown.
3%. Okay. But we have been approved for 5 products. So
yes. We continue to work with customers and product get it approved. When it is going to convert to the vehicle, when it is going to go, it's $1 million.
Okay. So this would be largely Ashok Leyland or any other OEMs also?
Yeah, majority of Ashok Leyland, the other customers we are working, but everybody has their own manufacturing and we are working with.
So Ashok Leyland themselves would also be having their own captive for defense, captive axle arm for defense, or they largely procure from us, or is there anyone else?
Can you repeat, sir?
For Ashok Leyland, would we be the only sole supplier for axles for their defense applications, or would there be anyone else also?
I don't know about that, but whichever the product is approved, we are 100%. See, the Ashok Leyland has different verticals of vehicles like mining vehicle, anti-mines, various applications. In those applications where we are supplying, we are 100%. But there are a lot of other defense programs that they have where we may not have a product which we are not present. So I'm not able to answer you clearly about what is it, but whichever the product we are supplying, we are 100%.
And what would be the contribution of defense as a percentage of?
We normally reveal that, sir, but it comes with a huge development cost and validation and testing cost. I would say that. So it's a long term. This is an investment for the long term for the organization, which will definitely make this organization a better contribution in the days to come. The government is also, whatever the commitment that they are given, they are working towards that. Still, whatever the commitment is given by 2025, how much is going to be procured is not happening. Only 50% of that is happening.
Okay, and just last question on this. Bharat Forge is talking about their defense, business, significantly going up, especially even on the vehicle side. So there, would we be like supplying the axles to Bharat Forge, or any color on that?
The Bharat Forge is using majority of their vehicles are with independent suspension, and we are making a rigid axle. We are not interested.
We are not there. Okay, that's it from my side.
Nagaraj, do we supply 1 or 2 axles, or we are not there, right?
Pardon, Mr.?
We are not there for selling to Bharat Forge from our plant, right?
No.
Okay, thank you.
Okay, thank you.
Yeah, thanks, Sagar. Sir, we have one question in chat box from Sridhar from Axis Securities Limited. I just read out. So what are the factors that led to EBITDA margin expansion by 100 bips YOY to 11.9%? And what is the management further doing to improve the margins? Also, any EBITDA margin target in the medium to long term? Shall be thankful if contribution to sales from top 2-3 customers in percentage could be shared.
Ranga?
No, I think I answered it before. Our desire is definitely to improve the margins. As I said, as the volume grows, you definitely see the growth in the margin percentages too. We are constrained to share a number, but definitely we have it as part of our strategic initiatives. We have a specific program called Mission 25, driving the cost lines and material performance. Systematically, we are doing it for the last 5 years. That's the reason we are large amount of these initiatives. One way is mitigating the inflationary pressures which is coming into the business, further contributing to the profitability. But our desire is to earn as much as possible. We seek every opportunities when the new product has been launched, and as well as other conversion initiatives we are taking it. We'll improve the performance. As long with the volume increase, you definitely see a better performances in the overall bottom line.
Shailesh, I think
Yeah,
that's
yes, sir.
time.
Yes, sir, due to time constraint, that was the last question for the day. So any closing comments would you like to make?
Yeah. Once again, thank you very much for all your confidence and continue to inspire us to grow. We will continue to put our efforts on product development. We will continue to put our efforts on making our plant the best plant to work with the new digitalization and new technologies to come. We'll continue to invest on people to make sure that the differentiator between us and our competition is the people who work for this organization. Technology and innovation continues to happen, and you have seen that we are number one in launching. I think Nagaraj talked about how many type of new technologies that we have launched. We'll continue to work on this. We're looking for your support. All the feedback that you have given, we take it, and we will continue to work on this and to see that how we continue to make this organization more trusted organization for you to invest most and more. With that, ladies and gentlemen, thanks for your time. Thank you very much. Thanks Ranga and Nagaraj and Panda for joining and then answering all the questions. Thanks Shailesh and team for organizing this wonderful session. Thank you very much.
Thank you, sir.
Thank you, have a great Diwali to every one of you. Thank you very much.
Thank you, everyone, and wish you a very happy Diwali.
Yes, all of you very happy Diwali.
Yeah, thank you, sir. We conclude this call. Yeah.
Thank you, Ranga. Thank you, everyone. Thank you, Nagaraj.